the minimum wave C resistance up here. We're not up there yet. Just going to point out the ADX here, right at the 20 line. It's flat. It's giving us no strength of trend at this point. The DMIs are still on the buy signal, so we'll see how that continues to play out. We'll get a little better picture on the weekly chart, I think. Very interesting week last week, as we had a couple of conflicting signals as far as we had this Dow theory confirm the bullish trend. We had a new high last week in the industrials, confirming the new high in the Dow transports. At the same time last week, we also had our old friend the Hindenburg Omen make another appearance, and it was confirmed last week. So we're on the clock again. Remember, the last omen from August was good through the end of the year. We've got a new omen signal that's good for another 4 months. And so again, the internals, the market internals are, not good in here. We've known this for a while, but the powers that be continue to, we talked about Greenspan and the current Fed making some statements basically saying that the stock market, they're not going to allow the stock market to be the straw that breaks the camel's back. So when you've got that pressure to keep the market up, but at the same time the market is telling us that it's tired in here, it's unhealthy. It's going to be an interesting time, I think, this coming year, especially maybe this first quarter should be pretty interesting. But the weekly Dow here, we've got a 5-wave pattern up here. We haven't come into this minimum wave 5 resistance yet. We've hit this DP, or this decision point resistance, which many times can be a turning point in the market. So we've, just give you an idea of where we are in the trend here, and we can see where the trend is getting a little long in the tooth. We haven't gotten to the resistance yet, but we get around this, 11,000. Let's see, it would start around 11,550 area, 11,600, all the way to 11,600, probably around 680 is the minimum wave 5. And so we'll see. We hit the DP, this decision point resistance on the weekly here, right to the tick, and market pull back from there. So we're at some weekly resistance, which is kind of the bigger picture resistance there. And so haven't gotten to the wave 5 yet, but we'll see what happens. Heading into a holiday week here, shortened trading week. Friday will be Christmas Eve, while the markets will be closed. I think your banks may be open, but and I think the NYSE will close early on Thursday, the 23rd. So a shortened week there. Typically light volume. Markets do like to the tendency is to head higher into holidays, but got a lot of confluence. We've got a lot of differing opinions technically in the market here. So we'll see how that plays out. I think the biggest news day will be Thursday, that early close day. Wednesday and Thursday, I guess. Wednesday we've got GDP and the existing home sales, and Thursday with durable goods, personal income and spending, jobless claims, consumer sentiment, new home sales, all kind of jammed in there between 8:30 and 10 o'clock on Thursday. So pretty quiet early in the week. Nothing tomorrow, Monday, is news-wise as far as economic data. So we'll see how this plays out. I think if we had a 5% correction from here, that put the YM, the Dow future, around 10,860, while a 10% correction would put us around 93.90. So just some targets there to the downside if the omen plays out quickly. Like I said, which will be difficult in this kind of environment, but you never know. So let me just show you a quick trade from the trading room that we were watching on Friday. When we came in the morning, we had a let me put the analysis on here, the Elliott wave analysis tool. We had a 5-wave pattern down. Here was the market open, and market headed down. We hit this, what we thought was going to be the wave 3 support. It held. We pulled right back into the wave 4 resistance. The wave 5 down, and this was the area we were looking to trade in. This was also, if I look off this prior swing high and we check our decision point tool here, right in decision point support area, along with the typical wave 5 support area. And when you hit those, typically the market will move back into the wave 4 and just above the opposite decision point off this wave 4 swing high here. That's typically the target here. Now, the risk reward on this was not spectacular. If I show you here, okay, it was about 1.5 to 1 risk reward, because you had a pretty large bar here on the reversal bar that you'd had to set the trade up. But if you did think the market was going to float up, this part of the equation looked great. This part of the equation wasn't ideal. We looked for at least 2 to 1, but it did float up. And in fact, later in the day, we got another long signal here. This TS3. I can put the analysis on that. Again, it was it was pretty slow, though. It did things did pick up towards after lunchtime, after meandering for a while. The TS3 set up, and that was a 3 to 1. Make that a little bigger here. A 3 to 1 at the first target. We had our STF, or a strong trend filter here. This gray band at the top, you see the oscillator came into the gray band, and that was telling us right in here that to hold the position for more upside, more potential upside. So at that point we could manage to trade with the ATR trailing stops, and we ended up getting a little better than the initial target there. And we can look at that trade to the stop area there. Ended up being almost 4 to 1. This particular size account, 16 lot, brought us about $1,500. So ended up being a nice day on Friday, even though things were slow. And we'll see what this week, this holiday shortened week. Wish you all a best holiday, and we'll see you after Christmas, and we'll see what things look like from here.